Hi there, and thanks for joining us on PhillipCapital's Market Watch. I'm Jeremy Foo from Phillip Nova. Today, let's take a look at what lies ahead for the US dollar, US index Dow Jones, and the euro-dollar forex pair. We will discuss fundamentals as well as key technical levels to look out for the coming weeks. The US dollar took a big leap upwards in November 2021 when the Fed announced at its meeting at the start of November 2021 that it would raise interest rates come 2022 for the first time since the COVID-19 pandemic. Since then, the US dollar has kept gains ever since, although choppy but maintaining gains. Markets are anticipating the rate hike to come in its next meeting scheduled for 17 March 2022. And the question now is not if the rate hike would occur, but by how much. A recent Reuters poll done in mid-February 2022 showed economists forecasting a 77% poll for a 25 basis point rate hike and a 23% poll for a 50 basis point rate hike, a 0% forecast for no change in interest rates. Either way, the interest rate hike in its March meeting will emphasize the hawkish Fed and would boost the US dollar higher, adding pressure on the major FX pairs. A 50 basis point hike will amplify the hawkish tone of the Fed and will likely push the US dollar even higher. The most traded FX pair, the euro-dollar, has been in a steady downtrend since the end of 2020, and since the Fed meeting in November, the pair has kept pace with the US dollar and has been in a steady range or consolidation between the 1.11 to 1.15 for the past 4 months. My neutral outlook on the euro-dollar pair is based on the fact that the pair will likely stay within the 1.11 to 1.15 range until the next Fed meeting in March. Following the decision on the rate hike, the US dollar boost could see the pair dipping to potentially the 1.08 support, thus the slight bearish outlook leading up to the March Fed meeting. The recent RSI, the Relatively Strength Index, confirms the recent lackluster momentum of the pair, and investors can look for trading opportunities in the range-bound pair in the next few weeks leading up to the Fed meeting. From there, would wait for the Fed announcement before looking into the outlook of the US dollar following the meeting for further direction on the pair. A number of recent factors, COVID-19, variant spreads, hawkish Fed, increasing inflation, and geopolitical tensions between US and Russia have kept US equities dampened as uncertainty lingers in the markets. Due to a number of these factors, US equity markets have struggled to build on gains ever since its run-up in March 2021. Since the run-up from the 33,000 level and hitting a new record high of 37,000 to start the year, the Dow Jones Index has more or less made a full retracement back to its run-up levels of 33,000. The 33,000 support level, which has held up for close to a year, should hold up for now, and investors can look for good buying opportunities to buy the dip and wait for recovery back higher towards 36,000 and over time 37,000, as equities usually do over time. Bear in mind that the Dow has closed at record highs yearly since 2009. The stochastic oscillator confirms the oversold conditions and signals potential slight recovery in the short-term and longer-term upside potential over time as market sentiment improves and lingering uncertainty subsides. That's all for PhillipCapital's Market Watch. Do remember to like and follow us on social media and subscribe to us on YouTube. Also, tell us what you think by leaving your comments below. Thanks for joining us. I look forward to supporting you on this trading journey.